Okay, ladies and gentlemen, so today we have Simon Hunt, and today we will discuss what's going on with the US economy. We will talk about commodities, precious metals, portfolio structure in the current environment, and many other very interesting topics. So Simon, thank you so much for being here.
Well, thank you for having me. I'm honored.
Thank you very much, sir. So we have so much going on now. What is your macro view on the US economy, and what are you paying attention to, sir?
Well, where do we start? When you dig beneath the surface, the US economy has been in recession for some months. Now the weaknesses are starting to appear in the official data, such as unemployment. If you look at real CPI numbers, not the fairy stories that have been issued by the BLS for God knows how many years, you find that actually, when you take all the manipulations that they have undertaken, you remove them, and real inflation last year was either 9%, not the 3% reported, or 10.8%. The 10.8% comes from a friend of ours, John Williams of Shadow Government Stats, who takes the workings of the CPI back prior to Arthur Burns in the 1970s, as successive administrations fiddle the numbers so as to reduce the outlays from the government for social services like pension funds, etc. So he comes out, the actual inflation rate last year was 10.8%. Then Larry Summers and his team, I read in a report that came out, which was subsequently rapidly deleted, that they took the workings back to 1983 and concluded that in the CPI last year was 9%. So everything that I see in America tells me that America is in recession and will probably remain so until the early months of next year. Obviously, what we're seeing is the Fed being politicized, and the probability is that we will have a rate cut later this month. I think that Powell will do so very reluctantly because the recently retired general manager of the Bank for International Settlements gave his final speech in Tokyo in May this year. And there were two principal thoughts that came out of that speech. The first was that the world cannot keep going forward with debt rising faster than real GDP. The second conclusion from his speech was that it is time that central banks stood up to the governments and stopped always creating a recovery when the economy or financial system gets into trouble. It's time to stop having a central bank put and allow market forces to clean the system. Now, with Powell being the most senior central banker in the world, I would have to bet that he had discussions with Carstens, the retired general manager of the BIS, before that speech was given. But he's under huge political pressure. So, and given that it is very likely that the Fed board will have a majority of Trump supporters on the board, then we would have to think that once again, the can is going to be kicked down the road. So unless we get an escalation, i.e. war, in Ukraine, led by the EU3 and Brussels going in to physically help Ukraine against Russia. If that does not happen, then what we see occurring will be a huge amount of liquidity being poured into markets fiscally and monetarily, starting before the end of this year, which will lead to the beginnings of a recovery, both in America and in the Western world, in the second half of next year. The problem is that it will effectively be a stagflation recovery, with inflation rising faster than economic growth. So we will see until, say, 2028, an inflation-led recovery, which will be good for asset prices, base metal prices, equity prices, but bad for bond markets. What will probably happen is that by the time we hit second half of 2027, we will be seeing US inflation and global inflation in double-digit numbers, which will then mean that the bond vigilantes will need a premium for their investment. So we will see US 10-year treasuries, for instance, in at least 10%, if not higher. What will that do to a leveraged system? So our bottom line is that the macro economy will remain weak until the middle of next year. You can already see it in real money supply numbers have begun falling, which is a good lead indicator for business activity. So the bottom line is play the short cycles, but don't invest for the longer term.
Mm-hmm. That's a very detailed answer. Thanks for that, Simon. So just in relation to the stock market, so you do expect a slowdown in the near term. Would that be would that affect the valuations of the current stock market? Let's say the Max 7, the big, technically overvaluated guys?
Well, the experts say that the stock market is heavily overvalued. I think we will not have a crash, but we will have a nice correction, 10 to 15% in most global equity markets by the end of the year. We will then have markets bottoming, probably by the middle of next year, and then taking the S&P as a yardstick, we'll probably see the S&P going from, say, 6 to 9,000 by the end of 2027. And the base metals, taking copper as an example, the market, despite prices, are actually in heavy surplus, probably in the first half of this year, the end of say July. The global market was in surplus of around 600,000 tons. Why are prices between 9 and 10? So with physical consumption remaining weak outside China, and given that we will probably see a pretty vicious bear market rally in the dollar, that will take the DXY from around 98 to 103. We see copper prices falling to around $7,000 in the early months of next year, and then doubling in price into 2028.
And just before we go into more details into the commodity sector, Simon, just on the US dollar, with everything that we talked about, with possible dollar getting stronger in the near term, but then after they put more liquidity into the system, things would not look good for the dollar, including the deglobalization and everything. So what would your outlook be for the next 5-10 years if you're talking about the US dollar?
Well, as I said, we will have a bear market rally, and using the DXY as our yardstick, we would then see the DXY at around 50 some point in 2028.
So
I'm not prepared to go beyond that because the world will be even more fractured in 2028 than it is today. And goodness knows where the dollar will then go.
yeah, that makes total sense. So let's talk about gold, Simon. Gold performed quite well recently, objectively speaking. And at the current valuations, it looks like we still have good trends in gold's favor. And one of the other things, Simon, I don't really hear anyone around me talking about gold at all, and never mind the mining stocks, which I see as a good contrarian sign. With gold being where it is, it still has potentially further to go. So I would like to get your view on the current valuation of gold and where you believe it could be heading from now on.
I think gold over the next month or so will reach close to will rise by another $200 odd. I think that associated with a vicious bear market rally in the dollar, which the US Treasury wants to see, as they've got heavy refinancings to do before the end of the year. So they need rates and long-term rates to come down. I think then we will have a sharp correction in the gold price that will take us to around 2,800. From that moment, which will probably be around the middle of next year, from that moment onwards, gold will resume its upward trajectory. If we are right on the dollar, DXY falling to 50, in dollar terms, I repeat, in dollar terms, gold prices would then rise to around $6,000. But that's in dollar terms. We know that the history of gold is that it retains its real value. So what are you going to relate gold prices to? Not the dollar, but your cost of living. I think a second which may not be far away, that the BRICS countries introduce their own currency, which in all probability will be linked to gold in some form or another, i.e., it will be supported by the gold which the big member countries own, such as China's approximately 50,000 tons, Russia's north of 12,000 tons, and I don't know what India has outside the central banking system, but it's a very large number.
Mm-hmm. And Simon, I was talking about this in one of my previous interviews as well, but if you look at real estate measured in gold and look at 1970s and today, the real estate is actually cheaper to measure in gold, which again proves your point how good gold is at maintaining your purchasing power. So that's very powerful because everyone's talking about how expensive real estate is in the US. So it's a very interesting perspective. And yes, if what you just said about BRICS happens, that would be a big game changer and would be very positive for the price of gold as well. And if we talk about silver, Simon, would it be a very similar story from your perspective about silver?
I mean, I don't follow silver closely, but by all accounts, in the short term, it looks as though silver will outpace the rise of gold's price. Excuse me.
Mm-hmm. And would there be any other commodities that you're paying attention to, maybe like uranium or anything else?
I don't follow them closely, but if you look at the geopolitical aspect of uranium, and if you look at the growth rate that is likely to be for nuclear power stations, then there is only one way that uranium prices will move, which will be upwards.
Yes, and these long-term contracts really put the floor on the price as well, which is very interesting because it's one of the unique commodities where the long-term contracts with the utility companies help you to predict the price, which is something I'm paying attention to as well. And Simon, just before we leave the commodity sector, I would like to ask you about the mining stocks. So at the current commodity prices, some of these mining stocks in gold, silver, and other commodities are doing fantastically. So they're printing cash, the free cash flow is really good, the balance sheets look good, and that's without the commodity prices going up. So would you be bullish and interested in some of the mining stocks?
My honest answer is that I would not be interested in paper assets.
Okay, that that
And
makes
I would be, if I owned gold, I would not have my gold held within the banking system
Mhm. And
for reasons I don't have to spell out.
yeah, uh, if we look at the energy sector, Simon, uh, if you look at oil and gas, what do you think about them in the short term and relatively mid-term as well?
That's a short term, that's a very difficult question to answer. uh, I have to think in the short term, that's the very short term, the next couple of months, we'll probably see oil prices falling further. But I do think that we're close to the bottom and that we will see, without any upheavals in the Middle East, we will see prices rising. The market is probably will be in better balance than many are saying. One reason being is that China will be filling up their oil tanks, and their economy is doing better than many people believe. But I think the big risk to oil, as it is to most things, is the likelihood that there will be a renewed US Israeli attack on Iran. Iran is well prepared for it now. And from what I understand, America is flowing in missiles and other military equipment, clearly in preparation for a renewed attack. So I think any new attack, it will be for real this time, rather than a lot of the American attack was theater, because America wants to see regime change in Iran because they want control of Iran's energy resources. What they fail to understand is that since that first attack, the population has united behind the supreme leader. And what is interesting, particularly the younger population. So basically, if diplomacy does not get the upper hand, then the risk of a war is very real.
Okay.
Perhaps I just add one comment,
Sure.
which is that Iran's foreign minister stated openly it's a waste of time negotiating with America.
Okay. So we have so many risks, Simon, coming from a variety of different directions. And I like to, make everything individualized so an individual can do something about it. So how would you be thinking about structuring a portfolio in the current environment so that it's balanced and can hopefully survive whatever happens?
I'm not a portfolio advisor, but my strategic answer: play the short-term cycles. Ensure that your deep freezes are filled with food, and that if you have a kitchen garden, make sure that it's growing well, because food prices are going to soar. Already the FAO Global Food Price Index, July last year, rose by 7.6%. And everything we put together suggests that we're going to see very high food prices over the coming 2 years.
Yes.
So my basic message is invest for security. Each individual has a different definition of security, but that should be the goal.
Yes, and you made a great point about food, Simon. So I myself is from Ukraine, and when the Russian invasion occurred, when some of the territories were occupied, people that had a lot of food, they were able to, stay in their houses locked in for long time, and they did significantly better than those who had food for a day or two, and they had to come out, and there's some very bad stories about that. So yeah, that's it's certainly, I think, something that people in the West don't pay too much attention to, but that's very, very important because bad things can happen all the time. And Simon, I like to ask this question for the younger audience. If we have an individual who's still at the beginning of his and hers well-building path, and there are so many options now with the bitcoins, the crypto, gold, silver, what advice would you have for that individual on how they can start off their well-building path and not make too many mistakes at the start?
Well, the value of Bitcoin is in people's perception. What value does it really have? It's perception. So perception is going to could well take Bitcoin much, much higher. But what is the underlying value? I'm very suspicious of Bitcoin. And I'm equally suspicious of crypto. I come back, I need security. What gives me security? It's gold. Gold has given you security over the centuries. I'm sorry, I can't answer it any other way.
Mm-hmm. And Simon, would you agree that even in this inflationary environment, it's very important to have cash on the sidelines for opportunities, but also outside of the system as well, in case something very unexpected happens?
I think it's very important to have cash outside the system.
Mm-hmm.
I mean, it's very highly likely that by the end of the year, Europe will be introducing capital controls. And I guess with Ireland being part of the EU, that will include Ireland.
It could. It certainly could. Okay, thanks for that, Simon. And so just before we wrap up, sir, what would be the best advice that you have ever received that had the biggest influence on your career as an investor, or it could be in general?
I'm having to dig up my memory. I guess years and years, decades ago, my financial mentor, was a well-known figure, was a governor of the Bank of England, said to me, invest with common sense and invest for security, which comes back to what I'm saying about gold.
Yes, that's a very good one. So Simon, these are all the questions I had. Is there anything else that maybe it's on your mind that we haven't mentioned? Could be anything at all.
I think you covered everything. Thank you very much. If
Perfect,
anybody
Simon.
wants to follow what we're saying, they can get hold of us on simon-hunt.com.
That's perfect. Thank you very much, Simon, and I hope to have you back.
Thanks. Thanks a lot. Cheers.